All right, welcome back. Let's get a portfolio power check. Your first guest says that next year will be the year of diversification. And to prove it, he has 3 ideas for it, the new year. Jay Peters is fund manager at New Edge Wealth. And he joins us now on set. Jay, thanks for coming in. We know it's like near the end of the year. It's New Jersey, so we appreciate it.
Sure.
All right.
Thanks for having me, Brian.
Let's start here. Stock number 1, that is Gilead Sciences. Biotechs, by the way, have been pretty red hot. It's up 30% on the year. Not doing great today. But what about Gilead attracts you?
You know, the healthcare sector's been through a tough couple of years, and this has certainly been a bright spot. Gilead's a highly innovative pharma company known for focus on high-value, deeply R&D intensive drugs, and they've certainly had a lot of success in their core HIV pipeline. And this is a company with 24 drugs in market, 50 drugs in their pipeline, 11 of which are focused on oncology, and we think that might provide some interesting upside in the coming years. But at the end of the day, Gilead's just a stable grower, company with a 2.8% dividend yield, trading at a reasonable 15 times earnings, and it's a very profitable biotech firm, about 35% free cash flow margin. So I think when you're thinking about the rotation and ways to diversify away from AI, there's certainly some high-quality pharma names out there like Gilead.
Yeah, I mean, listen, healthcare is going to be here for a long time, and this company's been around for a long time as well, as has our next company. In fact, I think this company, Mueller Industries, is over 100 years old. They're based sort of outside Nashville. They do stuff that we don't talk about a lot, HVAC, pipe fittings, things like this. Not a name I can recall talking about. What is it about Mueller Industries that attracts you?
Yeah, so thinking about diversification, not only across sectors, but in terms of capitalization, Mueller's a $13 billion company, $13 billion market cap company, really a global leader in the manufacturing and distribution of copper pipes and fittings. So yes, it is a storied company. It's been around for about 150 years.
I cut him short. I said only 100. Sorry, Mueller.
But it may be a straightforward business, but they are vertically integrated. So that obviously drives a lot of profitability, pricing power, and it allows them to manage their quality control. And historically, this is a business that's been highly correlated to construction activity and housing starts. And
it's like a data center play a little bit, though. If they do HVAC. That's a huge part of the data center business.
Yeah, like a lot of companies in recent years, data center demand has certainly become a big part of their business. And, so I think in the near term, you have that data center story supporting some of the underlying growth. But, if we do get a better economic environment next year, lower interest rates, maybe a little bit of activity in the housing market, their core business could start to reaccelerate. And the last piece of the puzzle is copper prices. So, we've talked about how tight that market is. And I think, you've had a lot of supply disruption this year. Demand continues to be robust. And ultimately, for a company like Mueller, because they're able to manage their input costs, they do pass on a lot of price increases to end market consumers. They're benefiting from higher copper prices.
Speaking of power, your third pick and final pick, one that I know well. This is one of the biggest power producers in the United States. They do all kinds of stuff. They do a lot of coal, too. The NRG kind of does everything. Stocks rocketed, though, this year, Jay, up 70%. You still see more upside, but how?
We do. So, yeah, it definitely had a great first half of the year. It's been kind of sideways here in the last 6 months. When we look at the AI infrastructure theme, the power generation story continues to be one of the biggest bottlenecks. If data center power consumption is expected to 3x over the next 5 years, there clearly isn't enough power supply in this country. It's why we're seeing higher electricity prices, why we saw another record PJM auction a few weeks ago.
And by the way, thank you for bringing that up. We're the only show, I think, in America that talked about it, this show, because it's such a huge deal. Oh, and NRG is a big seller into the mid-Atlantic energy grid. So I'm really glad you mentioned that.
I mean, that's why some of these independent producers we think are great, well-positioned businesses, is the fact that prices continue to rise and demand continues to be robust. And NRG, a company that is one of the largest independent producers, about 25 gigawatts of generation capacity. A lot of that is focused on natural gas, which is a more efficient, cost-effective form of generation. We think that's going to be key to supplying data centers and the grid going forward. And ultimately, a high-quality business, trades around 19 times earnings, double-digit revenue and EBITDA growth, and positive free cash flow generation. So a lot to like from a fundamental standpoint.